Investing in the stock market has come a long way. It's always been interesting to me to listen to the investing greats like Warren Buffett and Peter Lynch talk about the process of buying and selling stocks back in the day. They talk about things like going through pages of Moody's manuals, calling or sending telegrams to your broker in order to buy or sell shares, and many other things. Today, you can buy or sell stocks from just a few clicks on your phone or from your computer in your mom's basement, depending on who you are. I'd like to look at how investing has evolved from technology and what advantages are now available because of these changes. Welcome to The Eighth Wonder, a channel dedicated to making compound interest your best interest. So let's begin with a bit of history. In the 1970s, trading floors were the place where the magic happened. You had to call your broker and give them a buy or sell instruction, and they would contact the trading floor in order to place the order, and the traders would shout out orders, use hand signals, and negotiate prices in real time. The trade would be completed when a price would be agreed upon. The trade would then be recorded, and then your broker would get notified, and you would sometimes get a physical certificate to confirm your ownership of stocks. This was a long process that could take days from start to finish. Between 1970 and 1980, developments like the ticker tape came into play that helped to get information out a bit quicker. And that is, of course, where ticker symbols originate. In 1971, the Nasdaq Composite was created, the world's first electronic stock market, which eliminated some of the extra work that used to be done. Trades were still done through the phone, the landline phone, that is. Between the 1980s and the 1990s, computers became more widespread in usage and orders began to be executed electronically. It was between the mid-1990s and the early 2000s that the internet became mainstream, and that gave rise to trading platforms and online brokerage businesses, which in turn gave rise to retail investors, or the DIY investor as some might say. Today, the process of buying and selling shares is the easiest it has ever been, and this of course has some new advantages and disadvantages. I'd like to highlight what some of those are so you can know what to look for and what to avoid in order to make the most of your investments. As I mentioned earlier, the internet brought with it new ways of doing things. That came in the form of online brokerage accounts. These made investing more accessible, but it didn't immediately make it cheap. In fact, it wasn't until 2013 when Robinhood burst onto the scene that investing fees saw their biggest drop. This made investing available to the masses and forced the big firms to drop their fees as well in order to stay competitive. This was a huge win for investors, as it now meant that the regular Joe could have a chance to invest a little they have from time to time and be able to start building up a portfolio. The fact that it used to cost as much as $50 to make a trade once upon a time, and that you can now do that for free or even for a few cents, is big. With the introduction of low to no fee brokerage accounts, you and I can become retail investors, and we can take back the power and the profits. One of the biggest advantages of these brokerage accounts is the cost of investing. Because you are managing your own portfolio, there are no management fees, which is a big thing, especially when compared to an actively managed fund, which in most cases require a minimum amount, which is another barrier to entry. There's also the issue of management fees being a percentage of your portfolio, meaning that the more you make, the more you'd have to pay in fees. Not to mention that the fees apply regardless of the state of your portfolio, whether you're up or down. Over time, if you were to calculate how much the fees cost, it would be a significant amount, which essentially means that the fees ate into your profits. With a self-managed account, you don't have to worry about all that. In fact, you can set up automatic buy or sell orders to be executed at a specific time or at certain intervals as you see fit. This brings me to transactional fees. Using a brokerage account will ensure that your fees will be at a minimum, which means that you don't have to worry about them holding you back. You can have the confidence to do what you need to do without being charged an arm and a leg to do it. On top of everything, these brokerage accounts allow you to access the market in real time so you can see what is going on in the markets. Buy and sell orders are also executed immediately, which means that the price you see will be relatively close to the price you will pay. Of course, with all this being said, there is the other side of the coin where people lose money and end up frustrated. This can happen due to multiple reasons. Sometimes it's due to lack of understanding, impatience, FOMO, and so much more. Due to the ease of buying and selling, you find that people will buy a certain stock when there's hype around it and the price is going up. This is an emotionally driven decision which isn't backed up by any facts. It is risky because when the price of the stock goes down significantly, the person goes into panic mode and they might end up selling the stock for a loss, which is painful, but not as painful as discovering later on that the same stock has gone up again and has even reached a new high. Talk about a double whammy. These emotions can cause a person to lose a lot of money because they end up selling when the stock is down and buying when the stock is up, which over time eats up their money. Another related mistake a lot of people make is to YOLO their money into whatever stock that has the most hype at a given time with the hopes of making a quick fortune. This can stress you out big time if it doesn't work out. It can even cause you to get ill or lose relationships. The ease with which all these things are done should not get us excited to a point of forgetting to do our due diligence and assessing the risk attached. As a rule, Peter Lynch once said that if you can't explain why you own a certain stock to a child in a few minutes, then you probably shouldn't even own the stock. One of the coolest things that I like about DIY investing is that you don't actually need to know everything in order to get started. With the introduction of the ETF, you can manage to invest into a bunch of companies bundled together into one and get the average return of all these companies combined. ETFs allow you to essentially invest in an index fund that behaves like a stock, with insanely low management fees and no minimum amount to invest, which means that you can buy in fractions according to your budget. ETFs track the performance of index funds, so your returns will be the market average, which doesn't sound exciting until you realize that even some of the best fund managers can't match that performance. Market averages over the long term compound to give you some great returns. There are plenty of ETFs to choose from, and all you need to make sure of is that you choose one that is within your scope of understanding or just the most diversified. This also gives you exposure to different markets across the globe, which means that you are not limited to just the ones in your country. With the ability to invest so easily, with such a low barrier to entry, and with such low fees, the upside is just incredible. We've seen a rise in the recent years of the retail investor due to all the factors I've previously mentioned. I have been a huge beneficiary of this new age of investing, and I invite you, if you haven't joined, to consider it. I've seen firsthand what the power of compound interest can do for your portfolio if you can get started and stay consistent with it. We've come a long way since the day when investing was a thing that only the rich could do. Today, it is something that everyone can, and if you ask me, everyone should be doing. All of us can invest in order to build wealth and secure the future with an additional income. I've said it before, and I'll say it again. There has never been a better time to invest than in our world today. I believe that a decade from now, those who have invested will see the results, and those who didn't will wish they had when they see how far those who have invested have actually come. Investing in the stock market is one of the easiest ways to slowly build wealth. If you'd like to learn more about this subject and how you can make the most of it, then consider subscribing to the channel and clicking the notification bell so you never miss a video upload. I hope that you found value in this video, and if you did, show some love by hitting the thumbs up button and sharing it with your friends. May your investing journey bring in some good profits and some great lessons too. Thanks for watching. I hope to see you on the next one, but until then, stay invested.